Hello everyone, this is Evan from the Trade Risk here on Saturday, April 9th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then a few trade ideas heading into next week. We'll jump right into things with the S&P 500. We lost a little bit of ground this week, down 1.17%. You can see coming back, almost retesting the lows from last week. And notice this is the second down week now we've had in the past 3 weeks. This was following 5 upside moves here in the S&P 500. So let's take a look at where we came from this week. We started at the highs. Monday was this candle right here. Those were the highs of the week, right into this 207 level, which is holding as resistance. And right off the bat, we were on shaky ground here because Tuesday we had that gap lower with a lot of volatility. We ended up filling the gap, but we still closed near the lows. Wednesday, we completely reversed things, went right back to the top end of this range. Bounced on Thursday, it was the complete opposite. So it was this yo-yo effect all week, and we saw a lot of volatility, and it seemed like a lot of just movement, especially when you're looking at internals. The NIMO, which is now in the red underneath the zero line, which we wrote about. If you go to thetraderist.com, you'll see some of the posts we talked about there. That's now firmly in the red for the first time basically since the start of this rally back from early February. So there's a few pieces sort of cause for concern here, but price action is still holding up, all things considered. 204, this support level is holding, but we are sort of heavy. It feels like we're heavy on this. Many of the sectors were down this week. We'll get into that in just a little bit. And we do have earnings coming up. They kick off officially, I guess, Monday with Alcoa on Monday. So, we're going to have a lot of individual risk and sector risk as we start to get some of the guidance and see how some of these numbers are from some of these companies. That's surely to shake things up. But, this may not be a scenario where we just retrace lower and start, just roll completely over and start putting in a big retracement leg. Maybe we have some larger consolidation to kind of sit through as we move through earnings season for the next 2 or 3 weeks. And maybe this is just a choppy sort of environment that we're moving into as we get through April. So things to consider here. I think the levels are pretty clear to work with. 204, which we're close to on the downside, 207 on the upside, and then you have this next pivot down here right around 202. This will be an important level. And if you go back to the weekly chart, you can see the lows from the past 4 weeks all kind of coinciding right above, right around 202. So I think if we started to lose that, then, we can get a little slippery and start to head back lower, but certainly all speculative at this point. We need to see it happen. And right now, bulls still clearly have control. We're above a 20-period exponential rising moving average, although it is flattening now. So you just have to remain sort of neutral, ready to act. For us, it really means just being lighter here. I don't see much sort of directional edge one way or the other, and I'm waiting to just kind of see how we start to roll through earnings season. So we've lightened up a little bit, played with some shorts this week after some of the shaky ground that we started the week off with. So I think it's going to be some two-way trading from here on out. Looking at some of the other indices here, IWM, this one arguably holding up a little better. I mean, as long as it can hold above 108, I think things look good. Notice we had this strong breakout bar here. This was back, I believe, this was not Fed Day, but this was back a couple weeks ago on this Tuesday. So that was a nice move higher, and we've basically just consolidated, sort of, went sideways here. And as long as we can hold the majority of that bar above 108, I like it. And ultimately we need to get back above 110. This gap is still open from the beginning of the year. I figured we'd get that closed here while we were, basically at the close of last week. I was very optimistic coming into this week that we would at least get this closed. That didn't happen. Something to keep on mind. Qs, similar situation. This open gap still open, holding up here in a pretty tight range. Still, really just barely closed above the 8-period EMA here. So still a lot of strength in some of these major indices, even though there does seem to be, some movement, or loosely called distribution, I suppose, underneath the surface. So we'll have to see how that all plays out heading into earnings season. If we look at some other markets, TLT, continues to work itself higher. It's trying to break through the top end here. Go to the weekly chart. You can see what it's working with here. Nice. I mean, this is a pretty actionable looking pattern here. Almost like a little bit of not quite a rounded bottom, but whatever, however you want to frame that really. I think the bottom line is this 132 level is pretty important. It was important back in early 2015, and it showed its importance here throughout 2016. So keep that on watch. If this can get going a little bit more, then this could really start to accelerate to the upside. USO, this had a really nice move, particularly on Friday here, up 5.5%. Very impressive. So we broke through this support below 960 here. We traded down here for a few days, and then we launched higher back above it. So almost like a failed breakdown here, even though you could argue that it's just a longer term range that we're in and perhaps are in for a long time here. So for now at least, the bulls certainly have the momentum back in their favor. Maybe some trap shorts down here. USO looks good for higher. UNG, similar situation, though on Thursday came the big move of 6% here. You can see it's above, it broke above this sort of this falling trend line here. It's range bound. It's still off of the lows. I like the look of this. Unfortunately, we were stopped out of this here on this pullback, but I do like it. I'd probably want to just see it now get back above $6.90 or $7 or so. If that can happen, then I'd be interested in playing for an up move there in UNG. Look at the metals here, had a nice move as well. Gold holding on to 116 or so. You can see just very clear levels that you're working with in here, consolidating the big move up from February. Silver, similar situation. Go to the weekly chart. You can see coming and bumping up against this trend line right here. So looking like it's a pretty actionable pattern. Look at this rounded sort of bottom being put in here with this nice digestion right underneath some of these important resistance levels. So keep an eye on silver. I still do really like that. Silver and UNG are probably two of my favorite commodities, so keep them on watch. Now getting into some of the sector analysis, XLE, it's the energy sector. This was one of the few that were up. There were 3 sectors up this week. Energy was one of them. You can see here pretty nice looking pattern here. Resistance coming in right above price where it is right now. It's where we failed a few times before. Keep an eye on the energy sector. It is starting to perk up above the fast moving averages. I like it. XLV, healthcare, biotech, right? This is still continuing to perform. This was up this week, even though it had a tough day on Friday. Finally, the most beaten down sector of 2016 is starting to shape back up. So healthcare, biotech looks good. We're still involved in XBI. We took some profits, but we still have about half our position on in XBI. So we're looking for further upside there if the market can get its footing. And don't forget materials. These saw this big rally from February, and it's consolidated that move pretty nicely, and it could be ready to move again. So keep an eye on the materials. That's XLB heading into next week. As far as the downside goes, financials. One of the weakest sectors this week, the weakest sector this week. They do have many of these big banks, though, do have earnings coming up next week. So keep that in the back of your mind. Tough to probably hold shorts or longs, I guess, at this point into those big events. So keep an eye on that. But it did break through some support, so that looks vulnerable there. So does not discretionary utilities. A little bit weaker. You can see this Tuesday here was enough to get us off our long utility trade that we had on, and it stumbled a little bit this week, down 1.93%. So it is perhaps just coming to terms with these old highs here in 2015. So we'll have to see if we see continued weakness, or if we actually see some weakness in XLU. I'd hardly call this certainly not that weak. It's still the leader on the year. Let's get into some individual names. Apple, this one's still holding above a very critical level, this 108 level. You can see this is probably some type of mini. If we look down at a head and shoulders, perhaps, close enough. Looks like some minor topping pattern here at an important inflection point. Go to the weekly chart. You can see it's battling with this downtrend line here. It's got some support right in here, right around 108. 28, still very healthy. We just want to see it hold. This will be interesting heading into next week. Amazon, probably still one of the strongest of the FANG names right now, just consolidating sideways in here very cleanly. Had a nice run for about a week or so, moving sideways. Keep an eye on $600. I think that's your next trigger breakout buy. Facebook, this one under some pressure here, particularly on Friday. I think this was downgraded or in the news here on some level. It's a day to take notice for sure. It did break some support, coming to terms with some of this trend line right here. Any further weakness and you'd start to get a little concerned. You can see the fast moving averages starting to curl over, but let's see if the bulls can hold on to 110. If they can't hold these lows, maybe we do get some type of retracement here in Facebook. Finally, Google, similar to Amazon, just kind of holding tight, hanging out in this pattern here. This looked like a big igniting bar. We did buy this breakout here, but you can see it could never really materialize. And we basically exited flat or for a small loss within this chop, and we're just going to wait to see if this can emerge back again from, roughly 770 or so. But again, most of these names have earnings coming up pretty soon, so they may not do a whole lot ahead of those events. So finally, a couple of trade ideas to have on your watch list. Race, first one. You can see getting pretty tight here. Just keep an eye on this one, 42.50 or so, getting above convincingly this breaking this trend line here and turning up on some of these fast moving averages. Be sort of interesting going forward. AIZ, similar situations, pretty tight here. If it can start to move above $78, $79, could be interesting. Not quite a super volatile name, but maybe you get some movement out of there. And finally, TOL, TOL. This industry here has been holding up pretty well. TOL, I like the pattern here. Clear resistance right around this $29.50 area, almost $30. So just keep an eye on this heading into next week. I did post a video on Friday on some of the longer term weekly plays, so check that out, traderisk.com homepage. Otherwise, thank you for watching. If you enjoy the videos, please do subscribe, and I'll catch you guys next time.